So, Chapter 5 examples looking at transactions for capital projects. So, in this first example, we have a county which had constructed a library. The construction was funded by a number of sources, so we have different information about the library's capital project fund. We built it in 1 year. So we have these different transactions that we're going to record in both the Capital Projects Fund and the Governmental Activities Fund. So I put debits, credits, and then transaction 1. So we have the county issued $6 million of 4% bonds with interest payable semi-annually. The bonds sold for 101, a premium on February 1st, and proceeds from the bonds were to be used for construction of the library, with all income premiums received to be used to service the debt issue. We're going to be talking about debt issue funds in Chapter 6. So we have that we received, so this is our Capital Projects Fund. We received cash of $6 million, and then we had our other financing sources, proceeds of bonds. Okay. $6 million. And then in the governmental activities journal, we have cash, bonds payable, premium on bonds payable, and then accrued interest payable. So we have cash of $6 million, and then we have bonds payable of $6 million. One more zero. We had a 1% premium, so we have premium on our bonds, and then any accrued interest payable on those bonds. So on the when we sold them on February 1st. Okay. The second transaction says that we received a $650,000 federal grant. So transaction 2, the capital projects received cash and revenues. So we received cash of $650,000 and revenues of $650,000. In the governmental activities fund, we received cash, and then we have program revenues, culture and rec, capital grants, and contributions. Okay, so $650,000 in cash, and we have a $650,000 grant. Transaction 3 says the library's special revenue fund transferred $250,000 for use in construction of the library. So we have 3 in our capital budget project fund, we received cash, and this was a interfund transfer. So this was from the library that we received a transfer of funds like from fines or other things. Okay. Governmental activities. No journal entry required because it was a transfer between governmental funds. There would be a transaction in the special revenue fund, but we'll be looking at those in a future chapter. We look at 4, a construction contract was awarded in the amount of $6.8 million. So we put out bids. Construction companies said, I can build the library. We hired a construction company and signed a contract with them. They're going to build this building for $6.8 million. So in our capital projects fund, we now have a contract or an encumbrance. And then governmental activities. So no journal entry. So we encumbered $6.8 million for this project. We've told the construction company we will pay them that. In transaction 5, the library was completed 4 months ahead of schedule. Total construction costs for the library amounted to $6,890,000. When the project was completed, the cost of the library was allocated as follows: $200,000 to land, $6,295,000 to building, and the remainder to equipment. So in transaction 5, we're going to record that the construction was finished, and we're going to reclassify those assets to the proper categories. So we've got our capital projects fund where we're going to move that encumbrance. We're then going to record that we paid for the construction project. With cash. For $6,890,000. And then in the governmental activities, we have construction, work in process, and cash. So we do our percentage of completion for capital projects with the city government, where, and you'll see this when we get to the multiple projects example, where we look at what percentage is complete. The construction company can come periodically then and request partial payments, where we record that in a work in process and then pay them for like a month's work or a quarter worth of work. This, of course, gives the construction company cash flows during the year course, now that the construction project is finished, we are going to capitalize this project in buildings, machinery, and equipment, and remove that total cost from the construction work in process. Okay. And then the last transaction, transaction 6, we're going to close that project to our fund balance restricted. The resources are restricted because they were obtained from a bond issue exclusively for this project. Then we're going to be looking at moving things into the debt repayment and preparing to repay the bonds. Okay, so we're going to close our revenue and expense accounts. This is our capital projects fund. There would be no transactions in the governmental activities fund at this time because the closing only relates to the special project. So we had the $6 million. We received a $250,000 grant and a $650,000 in revenues. We then had expenses of $6,890,000, and that leaves us $10,000 remaining, which goes into this fund balance restricted and will be used to start repaying the fund balance. Okay, so we're going to close the fund now by moving that $10,000. So we're going to pay cash out to the debt service fund. As I said, we're going to be looking at those in Chapter 6. Okay, so those are the transactions, the journal entries that match these transactions. In the next example, we're going to look at bond transactions.